Wednesday, August 26, 2020, Maneco 64, home of alternative economics and contrarian views. Before I start today, no, we're not in a new room. We just moved the furniture around, so change things up a little bit. But anyway, I want to talk about the central banks, especially with this Jackson Hole Symposium coming up. And why do I go like that? Well, because usually they meet in Jackson Hole, Wyoming. Now with this current crisis, they're going to have a virtual meeting. It's the Kansas City Fed, of course, that organizes this conference. There will be people from all over the world speaking. Usually they go to Wyoming. At least they're not wasting, well, actually, it isn't even taxpayer money because they create the money out of thin air anyway. But a lot of you must be asking the question, what are the central bankers going to say? What's Jay Powell going to say? And yeah, they're going to say a lot of different things, a lot of technical things. They're going to show a lot of charts probably, or be talk about very arcane topics. They're going to use terms that seem really scientific. But in the end of the day, all you need to know about the central bankers at the stage of the game of the financial, monetary, economic game is that unless they keep inflating the system will die. So inflate or die will be their strategy. Of course, they're not going to say that. Of course, they're going to say that there's a problem with low inflation, low interest rates, low productivity. But what they won't tell you is that central bankers have manipulated money, markets, the economies for so long that they've killed the free market. And that's why things are not coming back. And of course, this current crisis is a great excuse, a great scapegoat for them to blame it on something else, right? Blame it on that C thing that I'm not going to talk about that much, and I don't need to anymore because it's all very clear what they're blaming right now. But and why do I say that they're the culprits? Well, because central banking is not a natural institution. Central banking is a monopoly created by government with the power to issue debt or fake money. They also have the power to control interest rates. They have the power to bail out the banks. So our financial and banking system has been artificially kept going for decades. They haven't allowed also economies to correct, to have recessions, to have failures, to have bankruptcies. Yeah, of course, there has been bankruptcies, but not of the institutions that should really be going bankrupt, like banks, like some of the hedge funds. They should know well, hedge funds, that that's part of capitalism, of free market. You don't bail people out. As the Austrian school says, and also Schumpeter said, he was a famous economist from Austria, that the best way to create things, to create prosperity, is through sometimes destruction. People forget Henry Ford, I think, went bankrupt a couple of times before he eventually became really successful. So yeah, that's the problem. So I'll quickly go through here an article in the FT this morning talking about Jackson Hole. It says central bankers face virus hit to global economy at crisis forum. Annual Jackson Hole gathering will take place online for the first time due to pandemic. So I spoke yesterday about inflation, how we've actually had almost 400% inflation since the year 2000, And by inflation here, of course, I mean the classical definition of inflation, which is the increase in the money supply. And in this case, I only looked at M1. I didn't even look at the credit. That's even bigger, right? So is it any wonder that the general public is feeling the pinch and has for many years? Is it any wonder that people are unhappy about their economic and social situation, especially, of course, the working class, the very low paid? They're not making any progress. Of course, the people working around this system, the politicians, the 1%, the people working in the financial sector, their wages, their salaries, their bonuses have all gone up massively. Of course, we've seen how the big fortunes have been really padded up in the last 6 months. And I think the objective of the central bankers is just to make sure that they convince the public and investors that there's a risk of deflation in order to keep inflating. But the thing is that the inflation is getting bigger and bigger, and one day it will pop somehow. I don't know. And yes, there will be a complete deflationary collapse, and then yes, we will see lower prices. But what we're seeing now with the CPI or PCE that the Fed follows, they call it the core PCE. What we're seeing is not deflation. If we really want to see deflation, the only people who can help deflate the system are the central bankers, the politicians as well, the governments. They've been inflating as well fiscally. It looks like Jay Powell will be speaking tomorrow on Thursday, and the market seems to be expecting him to be quite dovish as usual. That's what the markets are used to. The markets are so spoiled. It's like the markets are like a small little child that's very spoiled, and it will have a temper tantrum if mom and daddy, or in this case Jay Powell, doesn't keep giving them the sweeties, right? That's what it's all about. There is a lot of talk, of course, about AIT. What's AIT? You see, they come up with these acronyms. It sounds really scientific. It's average inflation target. And if you watched my video yesterday, I showed you how a 2% inflation or debasement of the currency annualized over 20 years gives you almost 50% haircut on the purchasing power of your currency. So you see, the central bankers are not happy enough with making you worse off. Basically, what AIT means is that if their target undershoots 2%, they will let inflation or their PCE or CPI go over 2%. But I've read about this in other articles. It's not as easy as it sounds. So they're going to have some problems with this. So what other central bankers are speaking? Well, we've got the Bank of England, the central banker, Bailey. He's speaking on Friday. For the ECB, it looks like Christine Lagarde will not be there. So they're going to have someone else speaking. The chief economist, Philip Lane, will be speaking. And as I said before, ignore all the noise, all the terms they're going to use. And just remember that the only thing they can do is to keep inflating. And that's why you need to be out of their paper, their fiat currency, as much as possible. As I said in the past, where you put your savings is up to you. As I've said many times, since the early 2000s, I've been trying to stack Billy as well. He's a silver bug. As much gold and silver as possible. Gold and silver are real money. They have been money and even currency at times for thousands of years. It's also, as Lindsay Williams says, the money of the elite. Gold is their currency. So Don't be discouraged. Short market action in the price of gold and silver. This is actually probably the best time to buy right now in terms of where we've been in the last month or so. Yeah, when it was at 2075, probably wasn't the best time to buy. Of course, there was fear of missing out, but this is the pullback period here. This is the consolidation, in my opinion, before the move higher. So there you go. Let's quickly look at the markets then this morning, see where we are. It's 7:10 a.m. London. We've got gold at 1916.60. That's down $11. So we're down just over 0.5%. Range has been 1915 to 1935. Silver is down 30 cents or just over 1% at 26.20. Range has been 26.13 to 26.62. The stock market, we've got the Dow future down 70 or 0.25%. S&P is basically unchanged at 34.42. NASDAQ 100 futures up 16 or up 0.15%. So the fiat currencies, we got the pound down 0.1% at 131.31. The euro is down also just over 0.1% at 118.15. And the dollar is unchanged against the yen, 106.40. And dollars continue to move lower versus the yuan. We're now just below 690. It's been a gradual move lower of the dollar versus the Chinese currency. And we're seeing also crude oil move up. Yesterday we were at 42.50 when I was making my video. Right now we're at 43.36. Even though it's unchanged overnight, we're higher from yesterday morning. So to finish off the bond market, the 10-year yield has crept up overnight. We're up 3 basis points, the 10-year yield, just below 0.72. So there you go. That's all you need to know, really. If you do your homework, and I have done for many years, and you know what the central bankers are all about and what this phony fiat currency system is all about, you know that the longer in the tooth, the more debt there is in the system. And we know we are at levels that are record levels of debt. And it can't go any lower. That's the thing about the system. The only way to pay off the debt is to bring the economy down. And they can do that. But the only way it's going to be done is through the crack up boom that von Mises talks about. There will be a point where there's so much debt that people lose confidence in the debt, or they lose confidence in the currency, and then you get the complete collapse. We got a little precursor or a little trailer of what will happen back in 2011, 2012, when we had the European sovereign debt crisis. Just imagine that on a global scale. Interest rates spiking to double digits everywhere. Governments collapsing all over the world. Companies going bankrupt. Yeah, that will be the future eventually. Yeah, they're going to try to delay that as much as possible for now. So there you go. There will be nothing really new under the sun at Jackson Hole. Yeah, maybe some new terms and terminology that they use, but don't be fooled. Anyway, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.